January was one of the best starts to the stock market that we have seen in years, but did February continue the streak? In this video, I'm going to go through my Trading 212 portfolio. So without further ado, let's get straight into it. So the total balance of my portfolio currently stands at £2,358.77. Now this is considerably more than last year because now Trading 212 has become my main deposit portfolio, meaning that the majority of my deposits that I do put in within investment accounts is going to go into Trading 212 first. This is because I stopped depositing in my free trade account, which was until then my designated deposit portfolio. So anyway, over the past month, things have been very different from the last month. So over the past week, the stock market has started to rally down a little, following enthusiasm towards the end of January, where investors were really happy about the rate hikes and the interest rate hikes not being as high as expected, and the fact that inflation does seem to be coming down a little. However, this hasn't kept the rally going up, and as you can see now, we are starting to go back into bear market territory. So at its peak last week, my portfolio was up by £73. However, currently it is only up by £12.70, giving me a positive return of 0.54%, which I am happy about. And I feel like the bear market is the ultimate place. We should definitely grab as many shares as we can during this period, where in the future, I'm pretty sure that we're not going to see these prices for a very, very long time. So I have 35 shares in Vodafone, and that is up by 0.94%, which is not too bad, and 35 shares is a nice amount to have. We can see that Vodafone is trading a whole lot lower than it used to, so potentially this could be a good company to buy, and it does give dividends, and it has a huge dividend yield of around 8.4%. That isn't to say that the dividends will be cut, however I did receive dividends from them recently, so as you can see, a 37 pence dividend, which is really high for a holding of only around £32. So finally, the Vanguard Germany All Cap is available on Trading 212. So if you know about this is the top companies in Germany, and I said a few months ago that Germany was the economy to put your money in, because following the War of Europe in 2021, their stock prices went hugely down because of their dependency on gas from Russia, and since then they have recovered quite a bit. I can't actually show you here because the graph is only about a week or so because it's new to Trading 212. However, it's gone up by over 20% in the past few months, which if you had put in a lot of money into the index, you would have gained a huge amount in such a short period of time. But anyway, I have 0.8 shares of this, and the reason is that I have been kind of trading it and have been making a bit of profit. If you stick towards the end, I'm going to go through all my realized profit and gains. Even though I don't do a whole lot of trading on Trading 212, it is something that is sometimes fun to do. I have 0.05 shares, which is only around £1 worth in the FTSE Japan, and that is up by a good 7%. So the Vanguard FTSE All World High Dividend Yield, again only £1 worth just to try out Trading 212, and that is up by 3%, so not too bad there. Unilever, again not a high amount, that was a £1 holding, and that is up by 6%, so a 6p gain. Tesla, I bought a few fractional shares in Tesla just because I had almost a guaranteed idea that they would go up following the massive dip that they took, and then since buying that, it has gone up by a huge 61%. So imagine putting more into Tesla, you could have gained a lot there. But then again, I don't recommend putting so much into individual stocks. I wouldn't have felt bad putting my money into any of these ETFs just because I know ETFs are a much safer way of investing because they are more diversified than, for example, putting all your money to Tesla just to see the company goes private or something like that. Something out of your control. If Tesla does bad, you lose all your money. So Tesco, I have very small amount of holding right now, but I had a lot more and I kind of traded that too. So if you can see history, I've sold a bunch and made a small profit. Currently, it is down by 1.8%, so it is good that I took my money out, I guess. Starbucks, 0.2 shares, and that is up by 7.95%, so Starbucks not doing too bad. Rolls-Royce was something that I bought just the other day, and already it's down by 0.89% since I bought it, so that's a negative £14 gain or loss if you look at it that way. So I bought it actually pretty high, I think. So I bought around 1,500 shares at around £1.09, and since then it has gone down. However, I think long-term Rolls-Royce could be potentially a good holding. I think it might get to the £2 mark eventually, so for long-term sake, I don't really mind too much about that. So just to quickly go through my strategy and rationale on my Trading 212 account, I have decided that I'm going to make my ISA with Trading 212. So the general investment account acts as a buffer that I can transfer into my ISA. So some of these holdings are more for kind of short term to kind of blossom around April, May, so that I can transfer into my ISA at a small profit. However, that being said, I have enough money in my free trade account to sell £20,000 worth of shares and then just lump sum into my Trading 212 ISA. But even then, it's nice to have a few shares that can grow over the term of 2 years for my next ISA. And even then, we don't know how much the ISA contributions are going to be this year. I really do hope it's going to increase from £20,000, but conversely, the reverse could happen and the deposit limit could go down to, I don't know, £6,000. So if it was £6,000, then I wouldn't really worry about filling my ISA, but currently my ISA filling is my main thing that I have to achieve first, in my opinion. That being said, Pinterest, £1 worth, hasn't changed. Nvidia has gone up by 50%, which is amazing. Really is amazing. This is a tech company that was kind of suffering after the post-pandemic blues. However, they are in the thick of it when it comes to AI and their new graphics processing technologies. So we'll see how far Nvidia goes up in the future. National Grid is up by 3%, which I can't be sad about. Lloyds Banking Group, which is actually a free share and one of the highest free shares I've received, that is down by only 0.7%, so I'm not too worried about that. Royal Mail has done incredibly well. That is up by 10%, so a gain of £1.37. IAG is down by 4%, and that's a loss of 44p. Not too worried about that. H&M, I have just over 1 shares. That is up by 14%, so not too bad there either. GSK is up by 10%, so that's a 43p gain. Happy about that. Fiverr is up by 10%, also another happy one. EasyJet is up by a massive 32%. And I did say when I purchased EasyJet, even though it was only £1 worth, that I do think that company is going to be kind of exploding in the future because aviation is going to come back in the future. Whether it takes 5 years or 10 years, Rolls-Royce and some other aviation companies are going to be doing well. Direct Line Insurance, doing really bad, but only have around £3 worth. That is down by 9%. Speaking about EasyJet, and I can link that with Lufthansa, they are also doing well with a 16% gain, and they are trading so much less than their all-time highs, and I do think there's a lot to be gained by holding Lufthansa and other aviation companies. Deca DAX plus maximum dividend up by 15%, so not too bad. Carnival, I have exactly 1 share which was a free share, and that's up by 17%. So BP, they posted their record-breaking profits yet again. They are up by a massive 15%, and as you can see, they have been doing very well past the pandemic blues, which for them as an oil and gas company, they didn't suffer at all in the post-pandemic blues where all the companies were devalued. They actually did one of the best. So of course, if you had kept dollar cost averaging into them or bought when the dip was available, you would have been making a nice and healthy return. But just like anything else, you shouldn't put all your money into one company, especially into something like BP, which is a cyclical stock, meaning that it has times and periods where it does really well and other times and periods where it's not going to be doing so well. So looking forward in the next 5 years, it might have a period where it's doing really bad as the price of oil and gas plummets, and of course their profits are going to be hurt too. Aston Martin up by 26%. That is not a shock at all because Aston Martin has been doing incredibly bad over the past 2 years, and of course a 26% gain is nowhere near to where it used to trade before, but I guess if you bought it for pennies, Aston Martin was a good stock for you. Apple is doing okay with an 8% gain. Amazon also doing okay, but I think they've been suffering in the last week or so with a few dips, and that is because the S&P 500 overall has been suffering a tiny bit. After it hit a slight peak in January, the S&P 500 is looking like it might rally down again. So Alibaba is doing okay with a 9% gain. Airbnb is also doing well with a 12% gain, and that's a 12p gain for me. AMD is doing okay. So it had a period of rapid growth and now it looks like it's slightly declining. However, that is up by 8%. And that's a 17% gain for me. So I'd like to go through the free shares just to show you how much I did earn from free shares and how that has impacted my portfolio. So I definitely would like to thank everyone who has used my link. I have had more people use my links than I have free shares available. So for a few of them, so around 6 people, you will receive a free share, but I will no longer receive a free share. If you do want to sign up to Trading 212, what I might recommend at this point in time is use the link of another YouTuber, because I will no longer receive free shares. However, that YouTuber may receive free shares. It's very nice and thoughtful for you to use my share, and I do have a cap of 5 free rewards per time the promotion's on, so think about that if you do want to sign up. However, I've received 10 rewards so far with a value of £158, which I'm very grateful for. Next thing I want to show is the history tab, and this shows me my realized profit and loss. So currently I'm sitting at a profit loss of £64.51, and if you kind of want to quickly see what I have been dealing with, so I've been basically buying ETFs ETFs and kind of trying to take advantage of the volatility that we're seeing so far. And yeah, I do this more on my free trade account, which I actually do find free trade to be easier for my own head in doing these big sell limits and buy limits. However, I know for most people trading 212 is easier because technically it is. In terms of dividends, I've so far received £3.96 with my latest dividend of 8 pence. And speaking of dividends, let's get into my pie where I am invested into the almost daily dividend. So currently the value of the almost daily dividend pie is £404.61. That's a positive return of 0.44% and that is a gain of around £1.75. Total gained is £2.63 in terms of dividends. This is actually pretty cool. With a value of £400 invested, I've already received £2.63 in terms of dividends, and there is some capital growth too. In the peak of January, this was up around 10 or 12 pounds, so that is capital appreciation on top of dividends as well. So to quickly go through the holdings, we can see Apple is down by a tiny amount, Realty Income up by 2%, AT&T up by 3%, LTC Properties down by 8%, McDonald's down by around 4%, JP Morgan and Chase up by 9%, Caterpillar up by 13%, Royal Bank of Canada up by 6%, Bank of Nova Scotia, that is up by 6%. We have a 9% loss in Cisco, not to be confused by Cisco, which with a C. Walmart is down by 1%. Starbucks up by 12%. Nucor up by a big 17%. Archer Daniel Midlands is down by a big 14%. Sherwin-Williams 2% loss, not too bad. Roper Technologies very much middle flat-lined. As you could probably tell by my voice, I am a little under the weather, so do make sure to check out some of my other videos and I will see you in the next video.